Next topic, which is regarding our regulatory body, SEBI. Now, why SEBI is in news? SEBI revamps mutual fund rule book. SEBI is a regulatory body just like your RBI for banks. SEBI is for mutual fund or entire capital market. Now, SEBI has introduced a sweeping changes in the 81 lakh crore mutual fund industry on Thursday. The mutual fund industry is very large. It is becoming as an asset a very large asset. 81 lakh crore of people's money has been invested into stock market. So it becomes important for all of us. And UPSC has a habit of asking a lot of questions from stock market. They are now allowing more exposure to gold, silver, and infrastructure investment trust within the mutual funds. These mutual funds can now invest up to 35% of the scheme in gold, silver, and InvITs. In gold, silver, you are aware of, and InvITs are basically trust which invest in government infrastructure or any other, let's say, private infrastructure, where the money goes for the development of infrastructure, and whatever new money is generated by that infrastructure, that is distributed among the shareholders as dividend. An important development is the restriction of portfolio overlap. A lot of changes are done that mutual fund industry launches a lot of scheme. Some schemes are having overlapping stocks. Now they have said that you should not carry so much of schemes which are having similar kind of nature of just the name changes and underlying it is entirely same. So you should not do like this. What is important for us here is SEBI. SEBI is an important institution when it comes to our UPSC prelims. Thus, before SEBI came into existence, controller of capital issue was the regulatory authority for the capital market. Now, SEBI was established in 1988 as a non-statutory body in 1988. Then it became a statutory body in 1992 with the Securities and Exchange Board of India Act 1992. So earlier we had controller of capital issues, then we have SEBI as a non-statutory body. In 1992, finally SEBI became a statutory body. Now SEBI covers three core objectives. First is to protect the interest of investors like you and me who put their money in the stock market, knowing that there is a regulator who will take care of our money. Then to promote the development of securities market, the new reforms have to be carried out. Earlier you used to get shares in the form of paper. You carry that paper and then deposit somewhere. You get those paper after 15 days. Then you have to redeem them. Again, it will take 10-15 days. Now the redemption happens on the very same day or T+1 day. Today you push sell on your mobile phone or computer, and next day money comes into your bank account. All these digital reforms have been brought in under the supervision of SEBI. And last is to regulate the securities market so that any fraud does not happen into the market. Now the composition includes there is a chairperson who is appointed by central government. There are 2 members from Ministry of Finance, 1 member from RBI, and there are 5 other members. At least 3 of them should be whole-time members. These are generally people who have knowledge in this, who are expert of this field. They are also a member of SEBI. So it has a chairperson and 8 other members. What are the powers of SEBI? They have a quasi-legislative power to make regulations. Why quasi-legislative? The kind of legislative but not complete. So they can make a regulation for capital market. Then they have quasi-executive power for investigation into the crimes done by any party in the capital markets. Quasi-judiciary to impose penalties. They can levy penalties. They can suspend trading of any company or individual. They can bar companies or intermediaries. Fine. Now what happens? There are a lot of scams. Whenever money is involved, a lot of scam happens. For example, front running. Front running happens when a mutual fund has to buy a share in bulk. Before that, some managers who are aware that our fund house is going to buy this share, they buy in their personal account. Because when a fund house buys something, they buy in large quantity. And when demand increases in large quantity, the share price rises up. So the manager who has bought in early, they get benefit and then they sell at the higher price. So this is for front running. So SEBI can stop all these. Any appeal against the decision of SEBI goes to Securities Appellate Tribunal, which is also found under the same act. And when you have further appeal against SAT order, it goes to Supreme Court. Fine. So appeal from SEBI goes to SAT and from SAT to Supreme Court. What are the important areas which can be regulated by SEBI? These are your stock exchanges like BSE and NSE. BSE is the oldest stock exchange of the country. Or then you have mutual fund houses, different IPOs come into the market. Recently your Lenskart, Paytm, Zomato, their IPO came. So they were all regulated by SEBI. Derivatives market, derivatives like futures and options, which derive value from some other contacts. Then your portfolio managers, they are personal portfolio manager for large institutional investors. They are regulated by SEBI. Then you have credit rating agencies, which rate different companies based upon their performance. They are all regulated by SEBI. Fine, so this you have to be aware of. Any regulatory body in India, it is important for the prelims perspective.